Okay. Good evening, everyone. Homework tried? Answer banta?
Yes, sir, it's easy. Second one, first is third.
So you understood, right? Okay. So yesterday we started discussing on debentures. Okay. Yes. So as told earlier, debentures is what? Debentures is debt. That means it's a liability. And this debentures can be issued for par, premium, and discount. Equity shares cannot be issued at discount, but debentures can be issued at discount. Equity shares can also be issued at discount only on reissue of forfeited equity shares, and that too discount is restricted only up to the forfeited value. Clear? So now, as I told you, debentures is a debt, correct? So when we issue debentures to the public, our liability will go up or come down? It will go up. So when we issue the debentures account will always be credited, correct? Because our liability will go up. So when we issue the debentures at par, so what is the entry? We will receive the money in the bank account and we will create the debentures liability account. Say debentures will always be like this: 12% debentures or 10% debentures or 9% debentures. So this percentage is nothing but rate of interest which we have agreed to pay to the debenture holders. So for example, if we take 12% debentures, the entry will be to 12% debentures account. So this is the entry. This is when you are issuing debentures for lump sum and for cash. Suppose if you are issuing debentures installment basis, just like how in equity share capital we can issue on installment, on application some money, on allotment some money, on first call some money, on final call some money. In the way debentures can also be issued like that for installment, but cash. Okay. So here what will happen? Say for example on application. So the entry will be bank account debit to debenture application account. Similar, then this debenture application will be transferred to debenture account. Then similarly allotment will be like that. Clear? So similar, same to share capital. Only thing is there share capital was owner's fund. Here it is a liability which we need to pay off. Just a second, I will open the material here as well. Okay. So next, when actual allotment happens, what is the entry you pass on allotment? Again, the entry will be debenture allotment account debit to, say for example, 12% debentures account. This also has to be transferred to debentures account, correct or no? So what is that entry? No, bank we have already received the money here. We have already received the application money, correct or no? Now debenture application account debit to 12% debentures. Correct. Next, for this you can receive the money in the bank for debenture allotment. Correct. Bank account debit to debenture allotment account. See, for application we have already received the money, but once you allot, you have to transfer that money to the debentures account. That is this entry. Here we are on allotment, we are calling the debenture allotment money. So that is why we are debiting debenture allotment account debit, that is receivable. Then we are crediting 12% debentures. Now when we receive this money, what is the entry? Bank account debit to debentures allotment account. So in other words, these two entries can be done in one. These two entries, what is that? Debenture allotment account debit, debenture application account debit to 12% debentures. Clear? Next, we will receive money for only this. So that time this is the entry. Clear? Okay. Next, same first call. So what is the entry? Or any relevant call. What is the entry? Relevant call. Of course, 12% debenture relevant call account debit to 12% debentures account. Next, when you receive the money in the bank, bank account debit to 12% debentures relevant call account. Clear? Now this is for par. Now what will change in premium, sir? What will change for premium? We will collect the premium. Here, when will the premium come? When the face value of debenture is 100 and we are issuing it at 120. That is when the premium comes. So if you are issuing it at lump sum, what is the entry? Bank account debit 120, correct, to 12% debentures 100. The remaining goes to security premium 20. Clear? Lump sum alli, sorry, installment alli, application same entry, no changes. Allotment alli, the entry will change now. What is the entry which will happen now? We'll get the premium. Usually premium is paid in the allotment. If the question tells premium is paid in the first call, then no entry, no change in the entry. But if it is paid with the allotment, then entry will change. Suppose say we'll write in the bracket premium paid. So what is the entry? Debenture allotment account debit. Suppose on application money we have collected 10 rupees and 10 rupees. Let's take an example. Clear? Next, on debenture allotment, let's say we have taken 50 rupees, including the premium. So if you split this, 10 on application, 50 on allotment, 20 is premium. Balance will collect in first call. Clear? Debenture allotment account, how much? 50. We'll reverse this also now only. Debenture application account debit 10. Correct? Next, to 12% debentures. How much? Don't write 50 plus 10. Why? Because there is security premium also included. So leave the security premium. So if you leave the security premium, how much it will be? 40. To security premium 20. Clear? Any doubt? Yes, because this 50 has 40, sorry, 30 plus 20. 20 is premium. This is nominal value. Clear?
Yes.
Next, relevant call remains same. Here bank account entry will be bank account debit to debenture allotment account. How much? 50. Already this 10 is collected during application only. Clear? So that is your premium. No change in the premium. Only change is you should recognize the premium collected towards security premium. Clear? Next, discount. What will happen under discount, sir? Face value 100, issue price 90. Okay, that means we are issuing less than the face value. So discount is 10. Okay. Next, here if lump sum, what is the entry? Bank account debit. Discount account. Why discount account debit? Because it is a expenses to us. To 12% debentures. So here, say for example, 90, 10 and 100. Clear? Next, in case of installment basis, application, say we are collecting 10 rupees, bank account debit 10 to debenture. You can do discount here or you can do discount in the allotment. Clear? Because we usually don't do discount here. Why? Because we might have received excess applications that we might have adjusted in the allotment money. So we don't usually pass here. Okay. Then on allotment, debenture allotment account debit. Say for example, we are collecting 50 and discount also you can pass. Discount account debit 10. Okay. Then 2, one more. This also we can reverse here only. Debenture application account debit 10 to 12% debentures. So that will be 50 plus 10 plus 10, 70. See, even though we are giving the discount of 10 rupees, my debenture should not show 90 rupees. In the balance sheet, my debenture should show 100 rupees only. That is why we are debiting the discount of 10 rupees. Clear? That is the logic. Next, when you receive the money, what is the entry? Bank account debit. How much? 50 to debenture allotment account 50. Next, relevant call, correct? So relevant call account debit, of course, debenture relevant call account debit to 12% debentures. What is the balance? 30, 30. Clear? That will collect in the bank. Bank account debit 30 to debenture relevant column. $30. Now, if you look carefully, how much did we collect in the bank? 10. $10 plus 50 plus 30. 90 rupees only we have collected. But how much we have credited the debentures account? Check here. 70, 30, 100. Clear? So that 10 rupees is nothing but our discount. Clear? Okay. So this is your entries for debenture. Any doubts in this? All good? Next, one more thing. When debentures are issued for other than cash, all these things we have seen for cash. That means we are receiving the money. In the equity shares also, we know sometimes we don't give the shares for cash. Rather, we give it, say I purchase something. So rather than giving him cash, I will give him equity shares. So that time, what was the entry? Vendor account debit to equity share capital. Similarly, here, if it is not for cash, not for cash, what is the entry? The first entry, suppose say for example, I purchased a plant and machinery for say 100. I purchased plant and machinery for 100 bada 1000 it. Okay. Now, if I purchase plant and machinery for 1000, I need to pay 1000. So rather than paying 1000, say I purchase it from ABC, what is the first entry you pass? Plant and machinery account debit to Mr. ABC. Purchase account debit anta helbedi. I have told already lot of times. When you are purchasing asset, it will go to asset account. Clear? Next. Now you have to make the payment. If you would have paid by bank or cash, then usually our entry would have been Mr. ABC account debit to bank account. This would have been our usual entry. Right? But here, what is happening is we are not paying it through bank. We are not paying it through bank. Rather, we are paying it through issuing debentures. Issuing debentures. So, what is the entry? Mr. ABC account debit barlevek. Correct? Mr. ABC account debit 1000. Right? No change here. Instead of bank, here what will happen? 12% debentures. 1000. 12% debentures 1000. Clear? Okay. Now this is when we are issuing at par. Suppose my debenture face value is 100 and I am issuing it at 100. Then how many debentures I will issue? 1000 divided by 100. That will be 10 debentures. But can I issue at premium? Yes, I can issue it at premium. Only thing is vendor should agree. Master. Correct? So when I issue at premium, what will happen? Everything remains the same. Here it is issued at par. Here issued at premium. Clear? Suppose now see nothing changes. Mr. ABC account debit only 1000 rupees. ಅವನಿಗೆ 1000 ರೂಪಾಯಿ ಕೊಡಬೇಕು 1000 ರೂಪಾಯಿನೇ ಕೊಡಬೇಕು. But now what will happen is, how much was the debenture value? 100, but issue price say is equal to 120. Issue price is 120. Now how many debentures will issue? Please calculate. 8.8 ಅಂತ ಹಿಡಿರಿ. 8 debentures. Will issue 8 debentures. Clear? Or you can make it as 125. Try 125. Huh? 8 debentures. Correct? Now, to 12% debentures, only nominal value should go to the debentures account. So what is the nominal value? 8 into 100. That is 800. The balance will go to 8 into 25. Correct? Yes. So that is our security premium. Clear? If we are issuing it at premium. Now, can we issue at discount? Yes. You can issue at discount. Who has to agree now? Company has to agree at issuing discount. Correct? So, Mr. ABC account debit 1000 only. No change here. Because 1000 rupees payable. Now 1000 rupees I have to debit. Now what happens? Debenture is 100. Issue price is say 80. Now calculate how many debentures we have to issue. 80 ಬರಲ್ಲ ಅನ್ಸುತ್ತೆ. Probably it will come in decimals again. Correct, no? 85?
9.76.
85?
11.76.
85, 11.76. 75 you do? It's okay, leave it. 80 only will take. How much? 12 point something, no? 12.5.
Sir, do it as 50 rounds.
Huh?
50%.
50% discount, who will give, sir?
Simply, it will be easy, no, sir. 200.
Fine, it's example, it's okay. You can take this. 12 debentures we are issuing. Okay, if we are issuing 12 debentures to 12% debentures, how much? 12 into correct? 1200. The balance? Twelve into 20. Correct, no? Did we miss something? But 12 into 20 will not come 200, no?
Yeah, sir. 12 point something.
That round off. But it should come still. 12 into 20 is how much? 240, no?
240. 240.
There is a difference. If you write here, we are only getting 200. As of now, you write 200. Because of the differencing figure, we are having a problem here. Wait, I'll check the correct number only so that we get the correct example.
50 is
Huh?
50 is best.
50, yeah? 50 is too much of discount, appa. Everything is becoming decimal, huh? Okay, if you give 50, you check 50. 50 means we are giving how many shares? 200 shares, huh? 200. Hey, not 200. 20, 20. 20. 20 if we do? 20 into 100? Correct. Here, 1000. What is 20 into 100? 2000. The balance 1000. That is nothing but 20 into 50. So we'll take that example only because we are getting decimals here. It's better to use that example. It can happen if the company is very weak. That will be 200, huh?
Yes.
Sorry, 20. 20 debentures. Twenty debentures into 100, 2000. Here, 20 debentures into 50 rupees, 1000. Clear? Okay, done. So that is your issued at par, issued at premium, and issued at discount for other than cash. Clear? Okay. We'll solve illustration. Illustration number 12. Book. Ilva? Tegiri. Check the online class.
Yes, sir. It's coming.
Coming, huh? But it is not live, no? Here it is not visible. Coming. Okay. So visible, no, now? Yeah. So X Limited made a issue of 10,000 debentures of 12% debentures at 100 each, payable as follows: 25 on application, 25 on allotment, 50 on first and final call. Correct? Applications were received for 12,000 debentures and the directors allotted 10,000 debentures, rejecting application for 2,000 debentures. The money received on application of 2,000 debentures rejected was duly refunded. The call was made and money was duly received. They have asked you to prepare journal entries and cash book. Clear? Shall we? What is the first entry, Appa? On receipt of application money. Correct? Bank account debit to 12% debenture application money account. Correct? How many applications received? 12,000 applications received. 12,000. Each 100. Correct? Oh, sorry, not 100. My mistake. How much was application money? 25. 25. Please calculate 12,000 into 25.
3 lakhs.
Okay. Next, allotment happens. Yes. On allotment, 12% debenture allotment account debit. Then we'll reverse this also. This one, 12% debenture application account debit to 12% debentures. Correct? Only 10,000 into how much? 25 plus 25, that is 50.
5 lakhs.
Correct? Here how much is due on allotment? 25 rupees. Correct? So 2.5 lakhs. Here 2.5 lakhs. This 2.5 lakh is nothing but 10,000 into 25. Here also same, 10,000 into 25. This, see here, we collected how much? 3 lakhs. How much we reversed? 2.5 lakh. That means remaining has to be refunded on the applications rejected. A refund of rejected application. 12% debenture application account debit to bank account. Why? We are paying through bank and our bank balance will come down. If asset reduces, it will be credited. Correct? 50,000, 50,000. That is nothing but 2,000 applicants into 25 each. Next, first and final call. Oh, sorry, we have not received this money in the bank, no? This money, debenture allotment money has to be received in the bank account. Bank account debit 2.5 lakhs to 12% debenture allotment account 2.5 lakhs. Done. Next, first and final call. 12% debenture first and final call account debit to 12% debentures. How much? 50, correct? 10,000 into 5 lakhs, 5 lakhs. Next, when we receive the money in the bank account debit to 12% debenture first and final call account. 5 lakh, 5. Narrations are important. I am not writing the narrations, but you have to write the narration. What narration you will write this? Being 12% debentures final call received. Okay, that's it. Done. If you want cash book to be prepared, we can prepare that also. Cash book. We can prepare the cash book as well. Cash book. Tell me, sir, cash book. What is the first entry? You received debenture application money. What is the entry? Bank account debit to debenture application money. So here to 12% debenture application. How much you received? 3 lakhs. Right? Next, you refunded something by 12% debenture application money, 50,000. Correct? Next, you received allotment money to 12% allotment, of course, debenture allotment account. How much? 2.5 lakhs. Right? Next, to first and final call. Of course, 12% debentures I missed, you write on. Okay, that will be 5 lakhs. That's it. So close this, 7.5, 10.5. 10 lakhs is the balancing figure. That will be by balance, carry forwarded or carried down, whatever it is. This is the balancing figure. Okay, done. Yeah, let's go to illustration number. Okay, they have asked you to show the items in the balance sheet also. I mean, whatever you have entered, no, they want you to show how it looks in the balance sheet. So I'll quickly draw your balance sheet. Only that relevant items, not the entire items. So all this time you have learned balance sheet in horizontal. One side liability, one side assets. But when it comes to companies, it is not horizontal, it is vertical. First equity, liability, then assets. In other words, starting equity and liability, then there will be assets. Same appa. Horizontal illeno, capital and liability, asset. Idina hing madara first. So equity and liability, then it will be assets. Clear? Okay. So the first part, equity and liabilities. Under equity and liabilities, we don't have any information on share capital, so leave it. If it was there, then we would have written it here. First item. Okay. We would have started with shareholders fund. Under that, we should have written subscribed equity share capital. Then in the note, we would have given what is the authorized, what is the subscribed, all those things. Clear? Here we would have written share capital. Then we would have written reserves and surplus. Then one more item will be there. Share application money received pending allotment. That also will be here. Okay. Next. So this is your shareholders fund. Next item will be your liabilities. Correct. The first one is non-current liability. Now always remember, debentures are issued for a period more than 12 months. So the moment it is issued for a period more than 12 months, it will come under long-term liabilities, non-current liabilities, correct? So non-current liability ಒಳಗೆ long-term borrowings ಅಂತ ಇರುತ್ತೆ. What is the item name? Long-term borrowings. So it will come under long-term borrowings. How much is it? 10 lakhs. Clear? Now nothing else, no information on current liability, nothing. So we'll write down second part, assets. We have no information on PPE, property, plant and equipment, leave it. Then we have no information on non-current assets. We have information on current assets. What is that? Cash and cash equivalents, correct? Cash and cash equivalents, 10 lakhs. Done. Your balance sheet is tallying. Clear? Okay. Illustration number 13. Same appa, no change. Only thing is there is premium here. Correct? What is the first entry on application? How many debentures? 2000 debentures. They have not told any extra application, nothing. They are told 2000 was given, 2000 was allotted. So first entry, bank account debit to 12%, sorry 13%. Something wrong with the tab. 13% debenture application account. How much is it? 2000 into 25. Allotment happens. Correct? 13% debenture allotment account debit. How much? 35 rupees. So 2000 into 35, 70,000. We'll reverse this also. 13% debenture application account debit, 50,000 to 13% debentures. 2000 into 25 plus 25. Don't do 35. Why not 35? Not include 35 because 10 rupees is the premium in the question. Here 100 issued at 110. So here including premium andre this 10 rupees. Okay. That balance will go to security premium account. How much? 20,000. That is nothing but 2000 into 10. Clear? When we receive the money, what is the entry? Bank account debit to 13% debenture allotment account. 70,000. 70,000. Okay. Next, first and final caller. First and final call. 13% debentures first and final call account debit. How much? 2000 into 50, 1 lakh. To 13% debentures, 1 lakh. Next, when we receive the money, bank account debit to first and final call. Yes. Final call. 1 lakh, 1 lakh. Clear? Cash account, cash book you can prepare. I'll prepare the balance sheet. First item ಏನಪ್ಪ balance sheet ಅಲ್ಲಿ equities and liabilities. This is Roman 1, this one Roman 1, that means here. Under equities and liabilities, shareholders fund, we have nothing, no information. Okay. Next we have non-current liabilities, this will come. Under non-current liability, long-term borrowings. How much? 10 lakhs, huh? No. 2 lakhs. 2 lakhs. One more item under shareholders fund, reserves and surplus. Security premium will come, no? Forgot. Next, second item. Assets. Correct. PPE, no information. Non-current assets, no information. Current assets, cash and cash equivalents. That will be 2.2 lakhs. That's it. Clear? In fact, we after showing this, we have to prepare notes to accounts. 1, 2, 3. Okay? Notes to accounts. 1. Reserves and surplus. Correct? So under reserves and surplus heading ಬರೆದು ಕೆಳಗಡೆ ಏನು ಬರೀಬೇಕು? Security premium. How much? 20,000. Here in the bracket you need to say premium received on 13% debentures. Clear? Same thing. Note number 2. Long term. Under that you have to write 13% debentures. 2 lakhs. Next, cash and cash equivalents. Idhar kelagade bank account. 2,20,000. Clear? This is how your item should look. Okay, next is illustration number 14. Same appa. ಏನು change ಇಲ್ಲ ಇದರಲ್ಲಿ discount ಅಷ್ಟೇ. So it is more or less they are giving for you to practice, but we are practicing together. Correct? In fact, I am practicing. Correct? On application. Simple appa 25, 20, 50. Okay. Illustration number 14. 2000 debentures, 14% debentures of 100 each issued at a discount of 5 rupees. Andre 95 rupees is the debenture money. So on application, what is the entry? Bank account debit. 2000 into 25. That will be 50,000. To 14% debenture application account. 50,000. Next, allotment. 14% debenture allotment account debit. ಆಮೇಲೆ 14% debentures application account debit. Discount account debit to 14% debentures. Yes. Debenture allotment ಎಷ್ಟಪ್ಪ ಡ್ಯೂ ಇರೋದು 20 rupees, correct? 2000 into 20, that will be here 50,000. Here 2000 into 20, 25 plus there is a discount of 5 rupees, correct or no? So total 50. Correct? Everybody? So what is the difference? How did you get 10,000? 2,000 shares into 5 rupees each. Clear? Next, when you receive the money, bank account debit to 14% debenture allotment account. Application has already been received, correct or no? Okay. Next, final call. Final, 14% debentures, first and final call account debit. 1 lakh to 14% debentures, 1 lakh. Next, bank account debit 1 lakh to 14% debentures, first and final call account. 1 lakh. Clear? Next, quickly we'll prepare the balance sheet. Correct? First Roman number, what is it? Equities and liabilities. Okay. First item, shareholders fund. Under that, reserves and surplus minus 10,000. Note number 1. Next, non-current liabilities, long term. Note number 2. How much long term borrowings? 2 lakhs. Nominal value, always nominal value. Next, assets. First one, PPE, nothing. Correct? Next, non-current assets, nothing. No current assets, cash and cash equivalents. How much? 1.9 lakhs. Clear? Note number 3. Note number 1, ಏನು ಬರುತ್ತಪ್ಪ? Under reserves and surplus, write down discount on issue of 14% debentures. How much? 10,000. Here 14% debentures, 2 lakhs. Here bank 1.9 lakhs. Clear? Any doubts in this? Next, illustration number 15. Illustration number 15. Already discussed these entries initially only when we issue for vendors. Correct? Only this points we are yet to discuss, that you leave it. I will help you to understand with the examples only. Illustration number 15, quickly. Optimist purchased a building worth 1.2 lakh and plant and machinery worth 1 lakh from Depressed Limited. Optimist has purchased from Depressed Limited for a purchase consideration of 2 lakh to be satisfied by issue of 2000 12% debentures of 100 each. Show the necessary journal entry. Now understand very carefully. Look at the question. What is the value of assets I have purchased? Factory building ಎಷ್ಟಕ್ಕೆ ತಗೊಂಡಿದ್ದೀನಪ್ಪ? Correct? Machinery total? How many debentures I am issuing? 2000 debentures at 100 rupees each, so 2 lakh rupees. How much worth I have purchased? How much you are paying? Do you think is it issued at discount?
Yes, sir.
No. Discount will come. Wait, I am coming there. I know you will tell like that. That's why I asked you a question. No. Look here, what they are told. Issued at? Did they tell anywhere discount? ಎಷ್ಟು ಶೇರ್ ಕೊಟ್ಟಿದ್ದೀರಪ್ಪ? 2000 ಡಿಬೆಂಚರ್ಸ್ ಕೊಟ್ಟಿದ್ದೀರಾ, 100 rupees ಕೊಟ್ಟಿದ್ದೀರಾ, 2 lakh rupees. Here, when will the discount come? When I am issuing it for a price less than my face value, then only discount will get attracted. Am I issuing it for price less than face value? So what you are doing? You have a better bargaining power with your vendor. You have taken assets worth 2.2 lakhs and you are giving only 2 lakhs. That means, are you indirectly making a profit of 20,000? But is this your daily business? It is once in a blue moon. So it is not a revenue profit, it is a capital profit. Clear? And that capital profit will go to capital reserve. You remember forfeited share, we transfer it to capital reserve on reissue of the share. Same. So building, when we purchase, our asset goes up. So building account debit 1.2 lakhs. Plant and machinery 1 lakh. Then to Depressed Limited, you have to pay to Depressed. Correct or no? No. How much you are going to pay? Only 2 lakh. So remaining is your profit. which is a capital in nature, capital profit. So that is why we transfer it to capital reserve. That is this note. Note number 2. If I would have told without the example, it would have gone bouncer. Clear? Next, when I issue the debentures, depressed limited account debit to 12% debentures. In this narration is very important, Appa. Why? Because how many debentures you are issuing has to be written here, especially for the vendors. Why? Because your debenture number depends upon the issue price. Here, the value will look 2 lakh for everything. Even if you issue at discount, it is 2 lakh only. Even if you issue at par, it is 2 lakh. Even if you issue at premium, it is 2 lakh only. What changes? Number of debentures changes. Clear? So, writing the number of debentures is very important. See, this 2 lakh, now I am issuing at issue price 100. So, how many debentures? 2000. What if I am issuing debentures of 150? This changes scenario. Correct? Now, 2000 will suddenly become 1500 maybe, or 1800. Roughly, I am telling. Clear? Yes. So, this will change. So, whenever you issue debentures to vendors or even shares to the vendors, you have to write down what is the number of shares or number of debentures you are issuing. Clear? Next, the XYZ company limited took over assets of 230 lakh, liability of 30 lakh from PQR limited for purchase consideration of 220 lakh. Clear? Don't get confused. Listen to me carefully. What is the assets I took over? I purchased 230 lakhs. Correct? What is the liability I took over? 30 lakhs. That means, what is the net assets I took? 200 lakhs. Sir, 230 minus 30. See, always remember, I told you this earlier also, a business is valued based on net worth. What is net worth? Total assets minus liabilities. So here, when I decided to take that assets, I decided to take liability. On what price do you think I will pay? I will not pay. Asset is 230 plus 30 rupees liability. 260 ಕೊಡಲ್ಲಪ್ಪ ನಾನು. ನೀವೇನು ಅಸೆಟ್ ಕೊಡ್ತೀರಾ ಅದರಲ್ಲಿ ನಿಮ್ಮ ಲಯಬಿಲಿಟಿ ಮೈನಸ್ ಮಾಡಿಬಿಟ್ಟು ಆ ಅಮೌಂಟ್ ನಾನು ನಿಮ್ಗೆ ಕೊಡೋದು. ಕರೆಕ್ಟ್ ಆರ್ ನೋ? ಎನಿ ಬಿಸ್ನೆಸ್, ರೈಟ್? ಕಾಮನ್ ಸೆನ್ಸ್, ಕರೆಕ್ಟ್? Why will I pay liability to him? Right? So 230 is the assets you got. In that 30 rupees gone. For what? For their liability. So how much is the net assets you got? 200. How much you are paying? Are you paying extra or less? Extra. In earlier case, what was that? In earlier case, ulta. Net assets was 220. We were paying only 200. That's why that extra was our profit. Now, loss. Correct. But my question to you, why will you pay extra when you know you are getting only 200? Huh? Yeah. No. Okay, if they bargain also, why are they having the bargaining power? If somebody is having a bargaining power, they should have something with them, because of which we can bargain. Correct? What will they have so that they are bargaining and we are paying extra? Huh? Customers. Okay. Why do you think customer will still continue with me only? Regular customers. So in other words, can we say that regular customers, what is the word for this regular? Why there are regular customers? Why this company might have a regular customer? Trust they have built over the years. Correct? That trust only in accounting world, what is the word used for that? Exactly. Understanding? This extra 20 lakh I am paying is nothing for their. If I am paying extra, that means they have a bargaining power, and that bargaining power might be their goodwill. They have a very good reputation in the industry, which, see, always remember the rule of the goodwill. Self-generated goodwill will never come in the balance sheet. So what do you mean by self-generated goodwill? Self-generated goodwill means I have my office, I am running it since last 20 years. Now, word of mouth, everybody knows Abhishek Sir is very good, he does things very nicely. So this is, how did it generate? Did somebody from outside sell it, or did I create this value for myself? Self-generated. I self-generated this goodwill. Did I spend any money on this? I don't know. I might have spent also. Who knows? But how do you quantify that? We can't quantify. Clients who comes to my office, I may offer them a tea or a biscuit. How many cups you have offered? How do you quantify? Over the years, you have done it, right? That is why self-generated goodwill cannot be quantified, cannot be calculated. That is exact reason why self-generated goodwill cannot be shown in the balance sheet. Understanding? Whereas, if you purchase the goodwill, in this case, we are purchasing the goodwill for 20 lakh. This can be shown in the balance sheet. So that means what? Today, Abhishek Sir has developed the firm. He has created the goodwill, but that goodwill is not showing in the balance sheet. Tomorrow, my students comes and say, sir, ನೀವು ಬಿಟ್ಟೋಗಿ ಸರ್ ನಿಮ್ಮ ವಯಸ್ಸಾಗಿದೆ ನಾವು ನಿಮ್ಮ ಫರ್ಮ್ ತಗೊಂತೀವಿ. ಆಯ್ತಪ್ಪ ತಗ. ನಂದು ಟೋಟಲ್ ರೆವೆನ್ಯೂ ಇಷ್ಟಿದೆ ಇಂಟು ಇಷ್ಟು ನನಗೆ ಕೊಡು. ಸರ್ ನಿಮ್ಮ ಬುಕ್ಸ್ ಅಲ್ಲಿ ಅಸೆಟ್ಸ್ ಇರೋದು ಬರೀ ಇಷ್ಟು. ರಿಮೈನಿಂಗ್ ಇಸ್ ಮೈ ಗುಡ್ವಿಲ್. Now they can carry that goodwill in their books, which I could not. But the moment they purchase from me, they can carry it in their books. Clear? Okay. So entry remains the same. When we take the assets, debit, asset will go up. When we take their liabilities, our liability will also go up. So two liabilities. ಅಸೆಟ್ ತಗೊಂಡ ತಕ್ಷಣ ಅಸೆಟ್ ಮೇಲೆ ಹೋಗಿ ಹೆಂಗೆ ಹೋಗುತ್ತೆ, ಹಂಗೆ ಲಯಬಿಲಿಟಿ ತಗೊಂಡ ತಕ್ಷಣ ನಮ್ಮ ಲಯಬಿಲಿಟಿನೂ ಮೇಲೆ ಹೋಗುತ್ತೆ. ಕ್ಲಿಯರ್? And how much we are paying? 220. The difference between these two is 20 will be shown as goodwill, and this goodwill can be shown in the balance sheet. Look at the difference. PQR Limited could never show this goodwill in their balance sheet. What was their assets? Only 230. Technically, what is their asset? But that 20 rupees they have self-generated it. That is why they could not show it in their balance sheet. But the moment I purchased, I can show it in my balance sheet. Clear? So sundry assets account debit. This is the balancing figure. Goodwill account debit. So in simple terms, I will tell you, if your purchase price is greater than net assets, it will result in goodwill. If our purchase price here, purchase price is greater than net assets. If our purchase price is less than net assets, then capital reserve, profit. ಅರ್ಥ ಆಗ್ತಿದೆನಾ? ಅಂಡರ್ಸ್ಟ್ಯಾಂಡಿಂಗ್ or no?
Yes, sir.
This is true not only for debentures, even for your equity shares. When we purchase a business, we may issue equity shares also. That time also same logic. If whatever shares the value you are issuing is greater than your net assets, then you are purchasing goodwill. If it is ulta, if your net assets are higher than the value you are your shares you are issuing, it is capital reserve. That is capital profit. Clear? Next, when we issue the debentures, PQR Limited debit 220, 2 debentures 200, 2 security premium 20. Now, why here 20, sir? Because see here, issued at a premium of 10%. Issued at a premium of 10%. Now it is very important. See here, how much I am paying? 220 only. Here also 220 only I am paying. Correct? But the 220 is split now. I will not issue 220 divided by 100. Rather, I will issue 220 divided by 110. Clear? Yes? Agree? So 200 will go to my debentures account. 20 will go to my premium account. Clear? Yes. So in this, they have not given number of debentures, face value, nothing is given. So what you do is, on this 220 only, you multiply 10%. That will be your premium. Not on this, sorry, my mistake. On this 200. On this 200, you multiply 10%. That will be your premium. Clear? Am I clear? Shall we go ahead?
Sir.
Yeah. See, one more way of calculating. Sir, how do we know it is 200, sir? No, in this 220 is there, no? This 220 we are issuing, but this is including premium. This is including premium. So, if 100 is my nominal value, 10 is my premium, total 110. Correct? Now this 220 represents what? Nominal value, premium or total? This 220 represents nominal value, premium or total? It represents total. Correct? If you want nominal value, no, cross multiply. 220 into 100 divided by 110. That will give you 200. That is your nominal value. You want premium? 220 into 10 divided by 110. That will give you premium. Everybody. See, that's why I tell you, mathematics is not out of this subject. Mathematics are still needed. So this all is a common sense which we use. Simple. If your nominal value is 100 and premium is 10, what is the total? 220. This is our issue price. Correct? Now how much we are issuing? 220. So it should be written here. Correct? Cross multiply. Ashte. Understanding everybody? Yes? Always remember to use same premium. Illi question alli premium 15% kotre, illu kuda 15% baribeki. Illi matte 10 baribedi. Understanding? What is given in the question? Use the same premium. In the current question, it was 100 plus 10 is equal to 110. So 220 represents this. Correct? So you can cross multiply and find out the answer. Next, third. Z Limited took over the assets of 6 lakhs and liabilities of 80,000 of C Limited for an agreed purchase consideration of 5.4 lakh to be satisfied by issue of 10% debentures of 1,000 rupees each. Okay. First, let's calculate net assets always. So, what is the assets? 6 lakh. Liability? What is remaining?
5 lakh 20,000.
Correct? Huh? Now, how much we are paying?
40,000.
Are we paying more or less? Correct? So, the remaining 20,000 is our goodwill. Loss, but it is not called as loss, it is a goodwill. Purchased goodwill. Okay? What is the entry? Sundry assets account debit 6 lakh to sundry liabilities 80,000 to C Limited. How much you are paying? 5.4 lakh. Goodwill account is 20,000. C Limited account debit 5.4 lakh to 10% debentures 5 lakh 40,000. But you are issuing it at 1,000 rupees each. So 5 lakh 40,000 divided by 1,000 will give you 5,400 shares. Clear? 5,400 debentures. 540, no, not 5,400. 540, sorry. Either they have given the answer wrong or question wrong. 5,400 or 540. Clear? So they have told 1,000, but here while calculating they have taken 100. Okay. This is for debentures issued at par. Now what if debentures are issued at 20% premium? Simple. 5.4 lakhs divided by 120 ne ತಗೊಳ್ಳೋಣಪ್ಪ ಅವ್ರ ಪ್ರಕಾರನೇ ಹೋಗೋಣ ಯಾಕೆ Tell me how much 5.4 lakh divided by 120. Debentures. Did you see? See, the value remains same, 5.4 lakh only, but number of debentures changes. So only 4.5 lakh will go to debenture account. Remaining 90,000 will go to premium account. Clear? Yes. Next, discount alidre 5.4 lakh divided by 90. 6,000. Correct? Now 5.4 debit only, but in that what happens? Here it will be 6 lakh. Why? 6,000 shares into 100 rupees each nominal value. The remaining will go as discount. Clear? Okay, next a little bit topic which is different. Debentures only. Now what happens is you take a loan from the bank. Now what bank says? As I told earlier, bank will not give you any loan without a collateral. Without a collateral. They either want land, building, or your gold, something they want as a collateral, or fixed deposits, or they will ask you to issue equity shares. So what I said, equity shares I will not issue. Why? Because if I issue equity shares, he will become owner. Then he will also come and start voting in my AGM. So what I will do is, you want collateral, right? So what we'll do is, I will issue debentures. Loan togondo, loan. But here, the debentures are not actually issued in the way it is issued to the public. Rather, it is issued as a collateral security. What security? Collateral security. That means I will not repay the debentures. I have not received any money on the debentures. I will not pay any interest on the debentures. However, tomorrow, if I default on making the loan payment, then they will invoke the debentures. Then they will come with us. You have given me debentures, now pay me back my debentures. Understanding? It is a collateral. Clear? So what they do is, sir, if they come back to me, I am not paying loan only, why will I pay debentures? And new question keltara. Correct? Now what they do is, they don't come to you. They will sell those debentures in the market. Understanding? And the people who have been sold, no, they will come behind you. Public, once it reaches the public, they will come behind. Or there are multiple agencies where, you know, they will come and ensure that the debentures get paid. So in other words, that will never happen. That situation is worst, I am telling you. This is issued as a collateral. Because I don't have land, I don't have building, I don't have gold, I don't have fixed deposit, nothing is there. So what I will do? I will issue debentures. Who can issue debentures, sir? All the companies can issue. But which debentures bank will accept? Usually bank will accept the debentures of listed entities. Unlisted entities, bank will not entertain. Clear? So now what happens? Now, see the way it shows in the balance sheet. Okay. Suppose I took a loan of 1 crore from the bank, say SBI. Okay. Now for this loan, I have issued collateral. What is the collateral? Say 12% debentures of 1 crore only. Clear? Now what happens? It depends. Sometimes they will go for less. 60. See, usually the rules are like this: 60 to 70% should be collateral. We are having 100%. It's fine. So equities and liabilities. Correct? First item, shareholders fund. Nothing. Second, non-current liability, long-term borrowings. How much? 1 crore. Now, this also 1 crore should come. Debentures, no? We have issued 12% debentures. We have taken 1 crore loan. We have taken 12% debentures. Do you think this should also come 1 crore? If it comes, what will happen? I will tell you. Go to assets. PPE illa, non-current assets illa, current assets alli 1 koti. Balance sheet is not telling. Now understand, this is the logic I want to explain. That 1 crore is there, no? It is not a public issue of debentures where I got money for issuing the debentures. Rather, it is given as a collateral security to get the loan from the bank. Once I repay that 1 crore to SBI, these debentures will also get automatically cancelled. So, tell me.
We will not repay.
If we
Not repay 1 crore.
If we don't repay 1 crore, that is what is, sir. If that 1 crore is not paid, no, they will invoke this 12% debentures. Automatically from that 1 crore, it will get shifted to this 1 crore. Same, sir. This liability, this SBI, now long term, this is SBI liability. Okay. Now if you say tomorrow I defaulted, from SBI liability, it gets shifted to long term debentures. Aste. In SBI balance sheet also, what will happen? Loan will close, debentures investment will open. Ashte agodu, venilla. Understanding? So that is why when we issue debentures as a collateral, we don't show loan also, we don't show debentures also. Why? Because either one will be there. If loan is there, debentures will not be there. The moment loan is going, that means what? You have defaulted. Debentures will get activated. Clear? So what do we do in that case, sir? What do we do is, long-term borrowings will write note number 1. Okay? In note, what we do is note number 1. Long-term borrowings. Under that will show SBI business loan 1 crore. ಅಲ್ಲಿಗೆ ನಿಲ್ಲಲ್ಲ. ಏನು ಮಾಡ್ತೀನಿ ನಾನು ಅಂದರೆ ಬ್ರಾಕೆಟಲ್ಲಿ ಬರಿತೀನಿ. Issued 12% debentures, so many numbers, whatever it is. Say for example, 10,000 or 1 lakh debentures of 100 each as a collateral. So that means what? You are telling the users of the financial statement that, see boss, this 1 crore loan we have taken from SBI, no, it is not free from collateral. We have given collateral. Tomorrow by suppose the loan gets defaulted, then this loan will become 0, automatically debentures will get activated and that becomes 1 crore. Clear? Sir, what if everything goes smoothly? Everything goes smoothly. Once you pay, this loan becomes 0, collateral will also get cancelled. That's it. Clear? This is first method.
Sir, there will be any interest for
Nothing, sir. No interest, nothing. That is why I am telling you. This is just like a paper, sir. ಈಗ ನಾನು ಸಿಂಪಲ್ ಹೇಳ್ತೀನಿ, ನೀವು ಹೌಸಿಂಗ್ ಲೋನ್ ತಗೊಂತೀರಾ. ಹೌಸಿಂಗ್ ಲೋನ್ ತಗೊಳ್ಬೇಕಾದ್ರೆ ಹೌಸಿಂಗ್ ಲೋನ್ ಪ್ರಾಪರ್ಟಿ ಅಂದ್ರೆ ಸೈಟ್ ಪ್ರಾಪರ್ಟಿ ಏನಿರುತ್ತಲ್ಲ, ಅದನ್ನ ಬ್ಯಾಂಕ್ನವ್ರು ತಗೊಂತಾರೆ. ದೇ ವಿಲ್ ಕೀಪ್ ಇಟ್ ಇನ್ ದ ಬ್ಯಾಂಕ್ ಲಾಕರ್. ಡಸ್ ಇಟ್ ಮೀನ್ ದಟ್ ಹೌಸ್ ಬಿಲಾಂಗ್ಸ್ ಟು ದ ಬ್ಯಾಂಕ್? ಇಲ್ಲ ಅಲ್ವಾ? ಆ ಮನೆಗೆ ಬಾಡಿಗೆ ಬರ್ತಿದೆ, ಮೇಲೆ ಫಸ್ಟ್ ಫ್ಲೋರ್ ಬಾಡಿಗೆ ಕೊಟ್ಟಿದ್ದೀರಾ. ವಿಲ್ ಇಟ್ ಗೋ ಟು ದ ಬ್ಯಾಂಕ್? ಹೂ ವಿಲ್ ಇಟ್ ಕಮ್ ಟು? ಹಂಗೆ ಸರ್, 12% ಡಿಬೆಂಚರ್ಸ್ ಈಸ್ ಓನ್ಲಿ ಫಾರ್ ನೇಮ್ ಸೇಕ್, ಪೇಪರ್. ನಾಳೆ ನೀನು ಕೊಡ್ಲಿಲ್ಲ, ನಾನು ಇನ್ವೋಕ್ ಮಾಡ್ತೀನಿ.
Sir, but bank will give 1 crore.
ಹಾ, on that interest will be there, sir. That is loan interest. That is not debenture interest. ಆ ಲೋನ್ ಮೇಲೆ ಇಂಟ್ರೆಸ್ಟ್ ಕಟ್ಟಲೇಬೇಕಪ್ಪ ನೀವು. ಅರ್ಥ ಆಗ್ತದೇನಾ? Loan you have to repay, loan interest you have to repay. But when you are paying loan and loan interest, why will you pay on debenture? ಅರ್ಥ ಆಗ್ತದೇನಾ? This is first method. Then there is one more method. Second method. Second method is, we create an account called as debenture suspense account. What account? So under this, what we will do is, when we issue the debentures, we will create the liability now. We will create the liability. So what we do? 2 12% debentures, 1 crore. Debit again ಮಾಡ್ತೀವಿ, we use debenture suspense account. Sorry, 1 crore. So what did we do? 12% debenture liability created. At the same time, we created an account called as debenture suspense account. Debenture suspense account. Huh? Huh?
Debentures. ಇಲ್ಲ, sale
Debenture I can issue to public also, no? See, ಇಲ್ಲ. See, when I issue debenture to the public, you receive money in your account. That is what before this we discussed, no? Bank account debit to debentures account, debenture allotment account debit to. That is the entry for when you are issuing the debentures to the public. Now here we are not issuing the debentures to anybody. It is not issue at all. It is giving the debenture papers as a collateral security ಅಷ್ಟೇ.
assurance ಕೊಡೋದು.
ಅಷ್ಟೇ. Here I am not getting any money from debentures. Rather I am taking the loan. For that loan I am giving something called as collateralized debentures paper. In before this case, we got the money for debentures. We issued the debentures to the public. Public paid us application, allotment, first call, final call, all those things. Here I am not calling anybody to pay for debentures. ನಂಗೆ ಡಿಬೆಂಚರ್ ಯಾರು ದುಡ್ಡೇ ಕೊಡ್ತಿಲ್ಲ ಡಿಬೆಂಚರ್ ಮೇಲೆ. ರಾದರ್ ವಾಟ್ ಐ ಡಿಡ್, ಐ ವೆಂಟ್ ಟು ಬ್ಯಾಂಕ್, ಐ ಸೆಡ್ ಐ ನೀಡ್ 1 crore. Bank said give me collateral. I said I don't have any collateral. So bank said you do one thing, you give us debentures as a collateral. So only when you fail to pay the loan, I will invoke the collateral. Till then, don't do anything. So first method is this one, to account that collateral. What to do? Nothing, do nothing. Just in the narration, in the bracket, mention that you have given so and so debentures as a collateral. ಸೆಕೆಂಡ್ ಮೆಥಡ್ ಅಲ್ಲಿ ಏನ್ ಮಾಡ್ತಾರೆ, ದೇ ವಾಂಟ್ ಟು ಶೋ ದಿಸ್ ಡಿಬೆಂಚರ್ಸ್ ಇನ್ ದ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ ಹ್ಯಾಸ್ ಬಿನ್ ಗಿವನ್ ಟು ದ ಬ್ಯಾಂಕ್ ಆಸ್ ಅ ಕೊಲಾಟ್ರಲ್. ದೇ ವಾಂಟ್ ಟು ಶೋ ಇಟ್ ಆನ್ ದ ಫೇಸ್ ಆಫ್ ದ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ ಓನ್ಲಿ. ಇಲ್ಲಿ ಫೇಸ್ ಆಫ್ ದ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ ಅಲ್ಲಿ ಕಾಣಿಸ್ತಿರ್ಲಿಲ್ಲ, ಕರೆಕ್ಟ್, ಇಟ್ ವಾಸ್ ನಾಟ್ ಶೋಯಿಂಗ್ ಆನ್ ದ ಫೇಸ್ ಆಫ್ ದ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್, right? So now what they do, they create a debenture suspense account. Now what will change, sir? What will change is first equity and liability, correct? Shareholders fund, nothing. Second, non-current liability, under that long term borrowings. ಇಲ್ಲಿ ಏನ್ ಮಾಡ್ತಾರೆ ಅಂದ್ರೆ SBI loan plus debentures, total they will show 2 crores. Okay, ಅಸೆಟ್ಸ್ ಅಲ್ಲಿ ಏನ್ ಮಾಡ್ತಾರೆ, PPE ನಥಿಂಗ್, ಕರೆಕ್ಟ್, ನಾನ್ ಕರೆಂಟ್ ಅಸೆಟ್ಸ್ ನಥಿಂಗ್, ಕರೆಂಟ್ ಅಸೆಟ್ಸ್ ಬ್ಯಾಂಕ್ ಆಗಲಿ 1 crore ಲೋನ್. ಸರ್ ಇನ್ ಮಿಕ್ಕಿರೋದು ಏನಾಗುತ್ತೆ ಸರ್, ಇನ್ ಮಿಕ್ಕಿರೋದು ಕರೆಂಟ್ ಅಸೆಟ್ಸ್ ಅಲ್ಲೇ ಅಥವಾ ಈವನ್ ಅಂಡರ್ ನಾನ್ ಕರೆಂಟ್ ಅಸೆಟ್ಸ್ ಓನ್ಲಿ. ಒನ್ ಸೆಕೆಂಡ್, ಐ ವಿಲ್ ಶೋ ಇಟ್ ಅಂಡರ್ ನಾನ್ ಕರೆಂಟ್ ಅಸೆಟ್ಸ್. ಒನ್ ಕ್ರೋರ್. ಇಲ್ಲಿ ಏನ್ ಮಾಡ್ತೀನಿ ನಾನು ಅಂದ್ರೆ ಮಿಶಿಲೇನಿಯಸ್ ಎಕ್ಸ್ಪೆಂಡಿಚರ್ ಅಂತ ತೋರಿಸಿ ಡಿಬೆಂಚರ್ ಸಸ್ಪೆನ್ಸ್ ಅಕೌಂಟ್ 1 crore. ಮ್ಯಾಚಿಂಗ್ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್, balance sheet is matching, no? Now 2 crore here, 2 crore here. So what I did earlier, I showed only 1 crore, 1 crore. The information of debenture collateral was given in the notes to accounts. Now what did I do, sir? I showed the loan of 1 crore. I showed 1 crore debenture issued as collateral. Because I wanted to show that debentures are issued as collateral, I created an account called as debenture suspense account, which I am showing on the asset side. So this 1 crore, this 1 crore is getting nullified by this 1 crore, cancelled out. Asset al 1 crore, liability al 1 crore. Clear? ಅರ್ಥ ಆಗ್ತಾನೆ ಅಲ್ವಾ? ಅಂಡರ್ಸ್ಟ್ಯಾಂಡಿಂಗ್ or no? If you want me to show in horizontal, if this is your balance sheet, long term borrowings, ಕೆಳಗಡೆ ಏನ್ ಮಾಡುತ್ತೆ, SBI 1 crore, ನೆಕ್ಸ್ಟ್ ಡಿಬೆಂಚರ್ಸ್ 1 crore. ಅಸೆಟ್ ಸೈಡ್ ಅಲ್ಲಿ ಏನ್ ಮಾಡ್ತೀನಿ ಅಂದ್ರೆ ಮಿಶಿಲೇನಿಯಸ್ ಎಕ್ಸ್ಪೆಂಡಿಚರ್ ಕೆಳಗಡೆ ಡಿಬೆಂಚರ್ ಸಸ್ಪೆನ್ಸ್ ಅಕೌಂಟ್ 1 crore and cash equivalents 1 crore. So this is getting cancelled out. Asset allu bartide, liability nallu bartide, no impact. Net effect 0. Clear? So this is one way of showing your collateral. The other way of showing is don't show this at all. Rather here under SBI we'll write it 1 crore debentures issued as collateral. Understanding everybody? Yes? So which we should follow in the exam, sir? Whatever you want, you can follow. If you want to follow, sir, I don't use the suspense account, leave it, don't use suspense account. Then what you have to do, you prepare a balance sheet extract, you show it under long term borrowings, prepare a notes to accounts, under notes to accounts you mention it. Clear? So when you want to show it as a suspense account, the entry is debenture suspense account debit to 12% debentures. So tomorrow, say for example, loan gets closed, sir, loan khali mugitu, debentures will also come back to you. So that time what I will have to do, pass the reverse entry, debentures account debit to debenture suspense account. Automatically this will also become 0, this will also become 0. Clear? Illustration number 16. Z Limited secured a long-term loan of 50,000 from the bank by issuing 600 12% debentures of 100 each. See here, how much is the loan? How much debentures? 600 into 100. That means 60,000 is the collateral we are giving. Clear? Each as a collateral security. Show the relevant items in the balance sheet of the company under both the methods. Okay? First method. What is the first method? Sir, I will not show debenture in balance sheet at all. Done. What to do? Equities and liabilities, non-current liability, long-term borrowing 50,000. Illi note number 1. ಆ ನೋಟ್ ಅಲ್ಲಿ ಏನ್ ಮಾಡ್ತೀರಾ, ಲಾಂಗ್ ಟರ್ಮ್ ಬಾರೋಯಿಂಗ್ಸ್, ಅಂಡರ್ ದಟ್ ಲಾಂಗ್ ಟರ್ಮ್ ಸೆಕ್ಯೂರ್ಡ್ ಲೋನ್, ಬ್ರಾಕೆಟ್ ಅಲ್ಲಿ ಸೆಕ್ಯೂರ್ಡ್ ಬೈ ಇಶ್ಯೂ ಆಫ್ 6 100, 12% debentures of 100 each as collateral security. ಅಷ್ಟೇ ಮುಗೀತು. Clear? This is the method 1. Method 2 will pass the entry. Debenture suspense account debit 60,000 to debenture account 60,000. In balance sheet, what will happen? Under long term borrowings 50,000, long term secured loan 50,000. Here 60,000 is shown as your debentures issued. At the same time, here only they are deducting less debenture suspense account 60,000. So net effect 0. Step. Clear? I told you, no, I can show it. See, this debenture suspense account is there, no? I can reduce it here only, or I can show it on the asset side. Effect is same. Asset to liability the L2 plus minus iddangappa. One ikkada plus ikkada minus. If both gets added, it gets 0. This is what they are trying to show. Clear? You want to show it separately on asset, separately on liability, that also you can do. No sir, I don't want to show. Show it like this. Show as long term secured loan 50,000. That is okay. Then secured by issue of 12% debentures of 100 each 60,000. Then minus debenture suspense account. ಇಲ್ಲಿ ಬರ್ದಿಲ್ಲ ಅವರು, ಬರ್ದ್ಬಿಡಿ. ಡಿಬೆಂಚರ್ ಸಸ್ಪೆನ್ಸ್ ಅಕೌಂಟ್ 60,000. So it becomes 0. Understanding? What changed? Sir, here we just brought in the narration about the debentures being issued as collateral security. Here we are showing the figures only. ಅಷ್ಟೇ. ಅಲ್ಲಿ ಬ್ರಾಕೆಟ್ ಅಲ್ಲಿ ಅಷ್ಟೇ ಬರೆದ್ರು, ಇಲ್ಲಿ ನಾವು ಎಕ್ಸ್ಪ್ಲಿಸಿಟ್ಲಿ ವಿ ಆರ್ ಶೋಯಿಂಗ್ ಇಟ್. ಕ್ಲಿಯರ್? Impact, same impact, no change. Whichever method you want to opt, you can opt. Example, ನಿಮ್ಗೆ ಯಾವ್ದು ಬೇಕು, ಯಾವ್ದು suitable, you do it. One at the same, result will be same. Clear? Yes? Okay. Next, issue of preference shares. Again, coming back to preference shares, exactly like your equity share capital, can be issued for par, premium, discount also. Clear? But understand, preference share capital is like debentures. It is a liability to the company. It is a liability to the company. It is not a capital. ಹೆಸರಷ್ಟೇ preference share capital, but it is not a capital, because they first thing is they usually don't have a voting right. Understanding? And they are not considered as members who can get the profits of the company. What they are only going to get is their dividend. ಅಷ್ಟೇ. ಅಷ್ಟು ಬಿಟ್ಟರೆ ಇನ್ನೇನು ಅವ್ರಿಗೆ ಸಿಗಲ್ಲ. Clear? So they are just the liability of the company. They give the money, and mandatorily company has to repay that money, no matter what. No matter what, they have to repay the money. Whereas in equity share capital, it is not like that. It is a Tirupati hundi. ಒಂದ್ಸತಿ ಒಳಗೋದ್ರೆ ಮುಗೀತು, ವಾಪಸ್ ಬರಲ್ಲ. ಯಾವಾಗ ಬರುತ್ತೆ? ಎಲ್ಲ ಹುಂಡಿ ಬಂದಾಗಿ ಟೆಂಪಲ್ ಕ್ಲೋಸ್ ಆದ್ರೆ, ಟೆಂಪಲ್ ಅಲ್ಲಿ ದುಡ್ಡು ಎಕ್ಸ್ಟ್ರಾ ಉಳಿದ್ರೆ ಅವರು ಅವಾಗ ಕೊಡ್ತಾರೆ. ಅಲ್ಲ, ಟೆಂಪಲ್ ಕ್ಲೋಸೇ ಆಗಲ್ಲ, ಅದು ಸೆಕೆಂಡರಿ. ಐ ಆಮ್ ಜಸ್ಟ್ ಟೆಲ್ಲಿಂಗ್. ಇನ್ ಕೇಸ್ ಆಫ್ ಕಂಪನಿ, ವೆನ್ ವಿಲ್ ದ ಇಕ್ವಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಗೆಟ್? ವೆನ್ ದ ಕಂಪನಿ ಗೆಟ್ಸ್ ವೌಂಡ್ ಅಪ್, ಅಂದ್ರೆ ಕಂಪ್ಲೀಟ್ ಆಗಿ ವೈಂಡ್ ಅಪ್ ಆಗಿ ಕ್ಲೋಸ್ ಆದ್ರೆ ಇಟ್ ವಿಲ್ ಗೆಟ್. ಸೊ ಅನ್ಲೆಸ್ ದ ಕಂಪನಿ ಗೆಟ್ಸ್ ವೈಂಡ್ ಅಪ್, ದೇರ್ ಇಸ್ ನೋ ಚಾನ್ಸ್ ದಟ್ ಇಕ್ವಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ವಿಲ್ ಗೆಟ್ ಎನಿಥಿಂಗ್. ಅದರಲ್ಲೂ ಫಸ್ಟ್ ಪ್ರಿಫರೆನ್ಸ್ ಇಕ್ವಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್ ಸಿಗಲ್ಲ. ಯಾರಿಗೆ? ಎಲ್ಲ ಔಟ್ಸೈಡರ್ಸ್, ಎಲ್ಲ ಲಯಬಿಲಿಟಿ ತೀರಿಸ್ಬೇಕು. ಎಲ್ಲ ತೀರಿಸಿದ್ಮೇಲೆ ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ ಹೋಲ್ಡರು ಅವ್ರನ್ನೂ ತೀರಿಸ್ಬೇಕು. ಲಾಸ್ಟಿಗೆ ಉಳಿಯೋದು ಈಕ್ವಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸಿಗೆ. ಕ್ಲಿಯರಾ? ಓಕೆ. ಹಾಂ. ಸೊ ಆಸ್ ಐ ಟೋಲ್ಡ್ ಯು, ವಿ ಕ್ಯಾನ್ ಇಶ್ಯೂ ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ಸ್, ಆ್ಯಂಡ್ ಐ ಟೋಲ್ಡ್ ಯು ವೆರಿ ಕ್ಲಿಯರ್ಲಿ, ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ಸ್ ಹ್ಯಾಸ್ ಟು ಬಿ ರಿಡೀಮ್ಡ್ ಮ್ಯಾಂಡೇಟರಿಲಿ. ರಿಡೀಮ್ಡ್ ಅಂದ್ರೆ, ವಾಟ್ ಈಸ್ ದ ವರ್ಡ್ ರಿಡೀಮ್ಡ್? And redeemed means paying back the money. Clear? So debentures has to be issued for a stipulated time period. Debentures can be issued for 3 years, 5 years, 10 years, 15 years, 20 years maximum. Ashte. 21 year, no sir, not allowed. 25 years, not allowed. Only one exception. Infrastructure companies. For infrastructure company, you can issue it for 30 years. Ashte. Adan datangilla. 31 not allowed. For other than infrastructure company, 20 years maximum. So what is this year, sir? What is the meaning of 3 years? That means you take the money now, use it for 3 years. After 3 years, pay back the preference shareholders. Now what will they get in return, sir? Dividend every year. They will get dividend 12%, 9%, 6%. 15%, whatever dividend. Same debentures ಹೆಂಗ್ ನಾವು 12% debentures ಅಂತ ಕರಿತೀವಲ್ಲ, ಹಂಗೆ there will be 12% preference shares, 15% preference shares, 10% preference shares. So that 10% is nothing but your rate of dividend. In debentures it is rate of interest. In preference share it is rate of dividend. And one more thing I want to tell, very very important, rate of interest or rate of dividend, both has to be applied on nominal value. Never apply it on issue price. If for example I have issued debentures of 10% for 90 rupees anta itkali, how will you calculate interest? This issue price 90, face value is equal to 100. How will you calculate interest? Don't do 90 into 10%. No, this 10% should always be applied on the face value. Remember that, always on the face value, never on the issue price. Clear? So redeemed is a word used when we repay the preference share holders. Same thing for debentures, we redeem the debentures also. Clear? So redemption of preference shares, the preference shares can be redeemed only when they are fully paid up. That means what, sir? See, fully paid up andre eno, you should have called all the money and they should have paid all the money. You remember calls, application, allotment, first call, second call, final call. Like that in preference share also you can issue on application, on allotment, on first call, on second call. Say for example I am issuing 3 years preference share. Okay, so first application allotment I made in year 1, year 2 I made first call, year 3 I was about to make the final call, but what happened, already expiry date came, maturity date came. Now can I repay them? No. First you collect the money, make the final call. Andre, if your face value is 100 and issue price is 100, ensure that you get this issue price. After that only you have to repay. So first year I called 20, second year I called 70, third year I need to call another 10. But before calling, expiry date came. So can I just pay 90 back? Answer is no. Call this, get the money, then you repay. Clear? Done. So the preference shares can be redeemed only when they are fully paid up. Clear? How the preference shares can be redeemed, sir? 2 ways. Out of the profits of the company, which should be otherwise available for dividend. Out of the profits andre eno, if company has generated good profit, from that profit you can redeem the preference shares. Clear? Suppose I have 1 crore preference shares which I need to repay. Now year 1 I made a profit of say 50 lakhs, year 2 20 lakhs, year 3 30 lakhs, year 4 30 lakhs. Do I have sufficient profit to repay 50 plus 20 plus 30 plus 30? I have. So I can repay this preference shareholders from the profits. What is the meaning of available for dividend? Available for dividend andre, this profit should be, I should be able to give it to the shareholders as dividend. Clear? So can I pay this as a dividend to my existing shareholders? Yes. Yes. This also yes. This also yes. This also yes. If yes, then that can be used for buying your preference shares, redeeming your preference shares. Or second way, sir, I have the profits, but I don't want to give it out of profits. Why you don't want to give it out of profits? Because I want to use this profit to generate, I mean to expand the business. Correct? I want to use this profit to expand my business. So now what I will do? Now what I will do is I will devise a new plan. What is the new plan? I will issue equity shares. I will take the money. I will give it to preference shares. Or I may do one more thing. Right now I have issued 12% preference shares. What I will do is I will issue 14% preference shares. I will take the money. I will give it to the 12%. Clear? That is possible. So out of proceeds of the fresh issue of shares made for the purpose of such redemption. See, my whole purpose of issuing the new equity share is to pay the existing preferences. Clear? That is allowed. Now, next is capital redemption reserve. This is an account. Sir, what is this capital redemption reserve? All the now we have heard about capital reserve, we heard about it. Now, what is this CRR? What is this CRR? See, CRR, what it says is, you can redeem preference shares in 2 ways, correct? One, out of profits. Second is by issuing preference shares. By issuing preference shares. So what your CRR says, whenever you issue preference, I mean you redeem the preference shares out of profit, if you redeem your preference shares out of profit, then whatever is the nominal value of redeemed preference shares, what value? Nominal value andre face value into number of preference shares redeemed. This is the nominal value. This value should be transferred to CRR account. To be transferred to CRR account. Sir, why, sir? What is the logic behind this? I'll tell you what is the logic behind this. Say, for example, for your understanding, I am showing in horizontal balance sheet. Say, I have preference shares of 1 crore last year. I had preference shares of 1 crore last year. I had preference shares of 1 crore last year. Now, next year, what happens? I redeemed this 1 crore preference shares. Now, my balance sheet will look nothing, no preferences. Is it looking empty? Is it looking empty? There is a change, no? Earlier, there was something called as 1 crore preference share. Now, that preference share is redeemed. Why? I repaid. Now, is it looking hollow? Correct? It looks hollow only. In reality, also, it looks hollow. See, I know equity share capital will be there, rest everything will be there. I agree. But suddenly, this item is going out and that is showing 0. Now, when I do the comparatives, correct? So, I am seeing last year preference shares 1 crore. This year preference share ಇಡೀ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ ಅಲ್ಲಿ ಹುಡುಕ್ತಿದ್ದೀನಿ, ಇಲ್ವೇ ಇಲ್ಲ. ಎಲ್ಲೋಯ್ತು? ಏನಾಯ್ತು? Correct or no? Last year there was preference share. This year there is no preference share. What happened? Now suddenly users of the financial statement will start thinking, what happened to the preference share? Is there any mistake? Is there any mistake? Correct or no? This looks very inappropriate to comparison. So that is why what they say, no? Whenever you redeem the preference shares, you create a new account called as CRR and show this 1 crore. Now when I compare preference share ittu, preference share hoitu, CRR anta hosa account bantu, ಆ ಅಕೌಂಟ್ ಇವಾಗ ಇರಲಿಲ್ಲ. ಫಸ್ಟ್ ಇಯರ್ ಅಲ್ಲಿ ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ ಇತ್ತು, CRR ಇರಲಿಲ್ಲ. ಸೆಕೆಂಡ್ ಇಯರ್ ಅಲ್ಲಿ CRR ಇದೆ, ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ ಇಲ್ಲ. ನೌ ಯು ಅಂಡರ್ಸ್ಟ್ಯಾಂಡ್? ಸೊ ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ ಹ್ಯಾಸ್ ಬಿನ್ ಪೇಡ್ ಔಟ್ ಅಂಡ್ ದ ಸೇಮ್ ಅಮೌಂಟ್ ಹ್ಯಾಸ್ ಬಿನ್ ಮೂವ್ಡ್ ಟು CRR. Clear? Understanding? So to ensure that there is no mismatch between the readings, they create the CRR account. Clear? Sir, from where will you create this CRR account? Is the question. Correct? I will create the CRR account using these things. General reserve, reserve fund, dividend equalization fund, voluntary debenture redemption account, voluntary debenture sinking fund, profit and loss account. Clear? From this you can transfer the amount to CRR. From this you can transfer the amount to CRR. Transfer means what? You remember share forfeiture account debit to capital reserve. Hange. Security is general reserve account debit to CRR. Ashte. So in other words, if your general reserve was showing a balance of 2 crores, after passing this entry, what will happen? Your general reserve will show 1 crore, your CRR will show 1 crore. Ashte. ಏನು change ಏನಾಗಿಲ್ಲ, just a movement to make it a better presentation. Ashte. Clear? So what all you can use? You can use general reserve, you can use reserve fund, you can use dividend equalization fund, voluntary debenture redemption account, voluntary debenture sinking fund, profit and loss account. This you don't worry, this will come. Not now. I will tell that. But you just remember these names. By heart it only. This is nothing. I mean, there is no way you can remember, so you can memorize this. See, 2-3 things you can have a logic. Even this too has a logic, but if I explain now, it will be overflow of things. Correct? So general reserve is nothing. I told you, all your profit and loss account gets transferred where? Out of profits. If you repay your preference shares out of profits, Then you have to show you have paid it out of profits, correct or no? Profits is sitting where? So you have to show that. How do you show it? By transferring it to CRR. Understanding the logic? So general reserve ಅಲ್ಲಿ ಇರೋದೇ ನಮ್ಮ ಪ್ರಾಫಿಟ್ಸ್, correct? Now I am repaying it using my profits. So how do you account it? General reserve to CRR. Same thing with reserve fund. See, reserve fund is usually created for some future expansion. How do you create that future expansion? Out of profits only. ಈಗ ನೀವು 100 ಕೋಟಿ ದುಡ್ದಿದ್ದೀರಾ ಅಂದ್ರೆ you would have created reserve fund for that, correct? Say tomorrow if I give 10,000 rupees to you, you will not immediately go and spend entire 10,000. You will keep some 3,000 for some reserve. You know which it will come one day. A day will come where entire money is over. That time I will be needing of this money, correct? But that is also created out of the profits. Now dividend equalization fund, again same. Dividend equalization fund itself, the name itself says this fund is created for what? Dividend. Dividend is what? Distribution of profits, correct or no? Sir, dividend ಹೆಂಗ್ ಕೊಡ್ತಾರೆ ಅನ್ಕೊಂಡಿದ್ದೀರಾ? ಸುಮ್ಮನೆ dividend ಕೊಡಲ್ಲ. Profit ಇರುತ್ತಲ್ಲ, ಆ profit ಅಲ್ಲಿ certain part will be paid as dividend. If I am earning 100 crore, if Wipro earns a net profit of 100 crores, do you think Wipro will pay 100 crores to the owners? They will pay 2% of it to the owners. 2 ಕೋಟಿ ಕೊಡ್ತಾರೆ, ಇನ್ 98 ಕೋಟಿ ಸರ್ ಎಕ್ಸ್ಪಾನ್ಷನ್. ಕ್ಲಿಯರ್? ಎಲ್ಲರದಂಗೆ Infosys also. See how much dividend I get messages. No, 1 rupee per share dividend, 5 rupees per share, 10 rupees per share. Maximum dividend I have seen in my life is around 250-300 per share ಅಷ್ಟೇ. ಅದನ್ನ ಜಾಸ್ತಿ ಕೊಡಲ್ಲ, ಅದನ್ನ ದಾಟಿ ಕೊಡಲ್ಲ. Clear? So dividend equalization fund is also created out of the profits. Clear? Next, voluntary debenture redemption account and voluntary debenture sinking fund account. You remember this. ಇದನ್ನ ನಾನು ಡಿಬೆಂಚರ್ ರಿಡಂಪ್ಷನ್ ಬಂದಾಗ ಎಕ್ಸ್ಪ್ಲೇನ್ ಮಾಡ್ತೀನಿ. ನೆಕ್ಸ್ಟ್ P&L account. P&L account is nothing but accumulation of profits, correct? So again out of profits. So this is also out of profit, out of profit, out of profit, out of profit. Clear? Okay. This is how you can create your CRR. Not allowed. Which are the items which are not allowed to create CRR? Security premium account, not allowed. You cannot use the balance in the security premium account to redeem the debentures, not allowed. Forfeited shares account, not allowed. Profit prior to incorporation, not allowed. Capital reserve, not allowed. Development rebate, not allowed. Clear, everybody? Now I will make one point which will now create a confusion in your head. What did they say here? Not allowed, correct? Not allowed for what? Correct? Okay. Section 52(2). The security premium account may be applied by the company. Security premium of the company may be applied by the company for providing premium payable on redemption of any redeemable preference shares. Sir, ಈಗ ತಾನೇ security premium ಯೂಸ್ ಮಾಡಲ್ಲ ಅಂತ ಹೇಳಿದ್ರಿ. But in security premium, if you go back, they are telling it is allowed on redeemable preference shares. Look here, wordings are important. Only premium payable on redemption of preference shares. So any premium is paid on redemption. Premium is paid andre enappa? Simple terms. Face value is 100. How much you have to repay? 100. But you are repaying 120. Sir, why will I repay 120? Because I have earned good profits. I want to give it back to the preference shareholders. Now this extra 20 rupees you are giving, no? This is called as premium on redemption. That means you are paying the premium. That premium can be adjusted against security premium. Understanding? This extra 20, you can use it security premium. But this 100 is there, no? Not allowed. 100 has to go from general reserve, P&L, dividend equalization reserve, reserve fund, voluntary debenture redemption account, profit and loss account. Clear? Understanding, everybody? Yes? So no confusion here. Am I clear? Okay. So for today's class, that is it. We'll discuss the same concept through sums in the next class. I think next class we'll be able to complete this chapter and start. Next class we'll continue discussing this in journal entries. Then once that is done, we'll complete this chapter. After that, we'll start partnership accounts. Okay. Chalo guys, thank you. Bye bye. Take care.